Which are the fastest growing stocks which you can buy this year? If you want to know the answer, make sure to watch this video until the end. Hello future billionaires, welcome to Stock Investing 101, the channel where you get stock inspiration, motivation and knowledge to become the next billionaire. In today's video, we'll be looking at the top 5 growth stocks you can buy now. Excluding private equity and distressed assets, most investors are looking to back businesses that are expanding, but above-market growth prospects demand above-market prices, and seldom there's little margin for error if a business doesn't improve as quickly as the free market expects. The best growth stocks to buy for 2021 are no exception, and some bear higher than average risk due to higher expectations. Still, others carry less risk than rivals due to their market positioning, size, competitive advantages, or some combination of all three. Regardless, the following 5 names have a certain business momentum and long-term potential that make them the top growth stocks to buy for 2021 and beyond. Growth stocks cleaned up in 2020 and they could have a rockier 2021. Still, keep these 5 names on your watch list to buy on dips. Number 5. NIO. NIO is a Chinese automobile manufacturer headquartered in Shanghai, specializing in designing and generating electric vehicles. The company is also involved in the FIA Formula E Championship, the first single-seater all-electric racing series. This company has a market capital of $97 billion. It has the potential to become a company with a capital of some $1 trillion, as this company is referred to as the powerhouse of Chinese electric vehicle companies. Of course, Tesla is a tough competitor, but it has the ability to be a $1 trillion company like Tesla. Although the company has a negative earnings per share rate, a constant alert should be there due to greater risk. Still, the company can grow up to 10 times in the coming years, thus becoming a $1 trillion company and giving 10 times our invested money. About 10 years later, it's expected that NIO will set up factories all over the world, thus dominating the whole electric car market. NIO stock rose 6.4% to 62.70 on the 11th of January, beyond a buy zone, but near session lows after hitting a record 66.99 intraday. NIO stock fell 5% in late trading after announcing a $1.30 convertible debt offering. A Citigroup downgrade to neutral after the close didn't help. Several analysts raised NIO stock price targets. On Friday, shares jumped 8.6% to 58.92 in stock market trading, clearing a 57.30 buy point from a cut base. Meanwhile, Li Auto closed down 4.4%, XPeng lost 2.4%, and BYD Co rallied 3%. Tesla stock tumbled 7.8%. On Friday, Li Auto lost 2.3%, Warren Buffett-backed BYD rose 1.2%, and XPeng gained 1%. Meanwhile, Tesla rose nearly 8% and is far extended from a 466 buy point. NIO already has public support and is considered as one of the top growing companies. Number 4. Fiverr. Fiverr is an Israeli online marketplace for freelance services. The company provides a platform for freelancers to offer services to clients worldwide. Fiverr was founded by Misha Kaufman and Shai Wininger and was started in February 2010. The founders came up with the thought of a marketplace that would provide a two-sided platform for people to buy and sell a variety of digital services, typically offered by freelance contractors. Fundamentally, Fiverr couldn't be considered the best choice as it has many risks, but the members like customer growth, revenue growth, and percentages could be a viable option. It stands huge like a sore thumb. They will release their fourth quarter data of 2020 on the 18th of February, and this will be a catalyst moving forward and will amaze people and is expected to surpass the estimates. The third quarter revenue was 88%, which is huge. They have 3 million customers from across 160 countries around the world, thus making it a global company. It's growing all across the globe. They are capturing customers worldwide. Fiverr is being more popular these days because things are now done online than by other modes. Last year at the same time, Fiverr had about 2.3 million customers, and this year for this quarter, it's said to have 3.1 million. That is a 37% increase in the number of customers. This company is said to have incredible growth. Their market capital is $8.9 billion, but with correct expansion and extension, this could easily be a $100 billion company in a few years. Fiverr too has a negative earnings per share rate. Number 3. Airbnb. Airbnb is an American vacation rental online marketplace company located in San Francisco, California. Airbnb sustains and hosts a marketplace accessible to consumers on its website or via an app. Users can provide lodging, primarily homestays and tourism experiences, or list their rental properties through the service. Airbnb does not own any of the listed properties. Instead, it profits by receiving commission from each booking. The company was founded in 2008 by Brian Chesky, Nathan Blashazik, and Joe Gebbia. Airbnb is a condensed variant of its original name, airbedandbreakfast.com. 20% of the vacation rentals in the industry are done through Airbnb. There are 17.5 to 20 billion revenue possibilities after the pandemic. They will capture a huge number of customers as the younger generation users are increasing after the pandemic. Even the older generation, who prefers going to hotels for vacations, prefers Airbnb a lot. This company is already doing really well in the markets, and as the whole industry pent up demand, this company has high chances of becoming a $1 trillion company. Airbnb is a $100 million company and is dominating all the hotel industry globally. It took something to revolutionize hotels, travel, and everything, and Airbnb is doing it. Number 2, SBE. As the name goes, it's indeed a charging company associated with electric vehicle charging stations in North America. ChargePoint is one of the world's top EV charging station manufacturers and also happens to be the largest electric vehicle charging network globally. They've got 115,000 charging stations worldwide, and by 2025, they are planning to increase that number to 2.5 million. Founded in Campbell, California, this is the largest AC and DC charging network company. With 14 countries and more joining the company, the ChargePoint is expected to grow more than ever. It's expected that by 2040, 57% of the vehicles would end up being electric vehicles. The most significant advantage of this, and why this could be a potentially good stock to invest in, is its availability. They own 73% of the North American 240-volt chargers, and Biden with his team will promote them as they are endorsing clean and green energy. The revenue for these charging electric vehicle companies will go over the roof over the next 5 to 10 years. This company is expected to lead the other similar companies. Their third quarter revenue was about 93% over 2019 and went up to $60 million from $31.2 million, almost doubling their revenue. If the company continues to grow at this rate, there will be a revolution as they are hotting 95% of the gross margins. More than 175 partners currently collaborate with the ChargePoint to amplify its needs. Another coolest thing is that the customers get access to all the charging stations with just a single membership. The tremendously growing company has completed more than 85.6 million charges so far and still continues. Let's look at the gross margins. This is one of the biggest highlights of the company. ChargePoint has a gross margin of 25 to 30% with a gross installation margin of 20%. Number 1. Skills. Skills is an online mobile multiplayer competition platform integrated into several iOS and Android games. Players use it to compete in competitions against other players across the world. Skills recently went public in 2020 through a special purpose acquisition merger. They had a pretty successful launch, but had a little bit of a pullback over the past couple of days, which has represented a good buying opportunity. There isn't much technical difficulty following the company, given how recently they went public, but we can see that they have a bit of a spike in price. Investors started just purchasing, which tends to be a positive catalyst for the stock, and given that they're 10% off the price. They always had big backers and have recently been recognized as the number 1 fastest growing company in the Incorporated 5000 and got listed in CNBC and Forbes' next billion-dollar startup. It's been growing at an insanely high rate. Their revenue grew about 92% in the third quarter of 2020 versus the third quarter of 2019. They got a high profit rate, but they lost about $43 million for going public as this process is too costly. The gross margin was 95% during the third quarter of 2020, the same as during the comparable quarter in 2019. Contribution grew 177% to $19.1 million during the third quarter of 2020, compared with $6.9 million during the comparable quarter in 2019. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comments section down below. We are posting a new video every day with the most undervalued stocks in the market right now.